All right, welcome back to Talk Tickers. Today, we're diving into White Fiber, ticker WFI, and their very first earnings call since going public. And let me tell you, this was not your typical report. We got our first real peek under the hood, and honestly, it's a bit of a puzzle.
So here's the big question, the real head-scratcher of the quarter. White Fiber missed their earnings per share target. I mean, they didn't just miss it, they missed it by a mile. But the stock soared. So what in the world is going on here? How does that even happen?
Okay, so let's start with the good stuff. The top line, the revenue, was actually pretty solid. They beat expectations by about $340,000, bringing in a total of $18.7 million for the quarter. You know, it's not a massive beat, but it's a beat, and Wall Street definitely took notice.
But, and this is a big but, the bottom line was a whole different beast. They reported a GAAP loss of 24 cents a share. Now, the street was expecting a loss of only 7 cents, so they missed that by a whopping 17 cents. Yikes, that's a huge miss.
And yet, look at this. This is what the market had to say about that massive earnings miss. The very next day, the stock just ripped. It closed up almost 12% and on some serious volume too. So the big takeaway here is that investors they completely ignored the miss. The question is, why?
All right, to figure that out, we've got to dig into the headline numbers. And it really is a tale of two different stories playing out at the same time. You've got this super powerful growth narrative, but then you have this pretty intense pressure on the bottom line.
Okay, take a look at this table. The contrast is it's stark. On one side, you see this awesome 48% year-over-year revenue growth that's mainly coming from their cloud services business. But then, look right next to it. Their adjusted EBITDA, it got cut in half, down to $3.3 million from $7 million last year. And that's what's driving that big $8.8 million net loss. It's a total split decision.
So let's unpack what's really going on behind these numbers. What it all boils down to is a classic battle, right? You've got this amazing top-line momentum pushing forward, clashing with the really heavy costs of trying to scale up, especially as a brand new public company.
Okay, so on the left, this is the good part of the story. You've got that strong cloud revenue, and check out those gross margins, 61%. That's fantastic. It tells you that the core business itself, on a per-unit basis, is super profitable. But then you look to the right, and that's where the pressure comes in. The operating expenses just ballooned. A lot of that is stock-based comp and other one-off costs from the IPO. So for the moment, the costs are definitely winning the fight.
And this is where the story pivots. This is where management's narrative just completely takes over. The CEO, Sam Tarr, was on the call just hammering this point home again and again. See, they don't build data centers like everyone else. Their whole secret sauce is that they retrofit old industrial buildings. And this quote, this is their entire pitch to investors and customers in one sentence. And you know, this isn't just some marketing slogan. They're actually doing it. Take a look at their Montreal 3 site. In April, this place was a mattress factory. Yeah, a mattress factory. And in less than 6 months, they turned it into a high-tech, high-performance data center for a big AI client. This is the proof. This is faster and cheaper in the real world. Think about it. While their competitors are literally waiting for concrete to dry on brand new sites, White Fiber is already up and running. Okay, so let's circle back to that big question from the beginning. Now we can see how this all connects to the market's reaction. It's so clear that investors just looked right past those short-term losses. They were not buying the company based on Q2's numbers. They were buying the story, the big picture. So what exactly did the market hear on that call? Well, for one, they heard a pure-play AI infrastructure story. This isn't just another boring data center company. No, this is an AI company. They also heard that demand for their huge flagship site, NC1, was exceptionally strong. So strong, in fact, that the CEO said there was a horse race among clients to sign the lease. And importantly, they heard that management isn't just taking any deal. They're disciplined and willing to walk away if it's not the right fit.
And this quote from the CEO, man, it just sums it up perfectly. These are champagne problems. I mean, think about what that means. When you have multiple big-name customers literally fighting over your product to the point where it's causing delays because they keep wanting more, that's not a bad problem to have. That is the definition of a champagne problem. It's a huge signal of massive demand and, more importantly, pricing power.
So, where do we go from here? What does this all mean for the next quarter? Let's get into our outlook and our official rating on the stock. All right, looking out over the next 6 months, there are really two massive milestones that you have to keep your eyes on. The first one, and this is the big one, is the announcement that they've officially signed a contract for that NC1 site. Management says it's coming in weeks, not months. And then second, we'll be watching for the actual launch of that site, which is scheduled for the first quarter of 2026. So, for the next earnings call in Q3, here's our prediction. The entire conversation is going to be about one thing and one thing only: the NC1 lease. Yeah, sure, the operating expenses are probably going to stay high while they're in this growth phase, but let's be honest, the market is going to completely ignore any weakness on the bottom line as long as they announce that that massive NC1 deal is signed, sealed, and delivered. It is, without a doubt, the single most important thing for the stock right now.
So, with all that said, our official rating on white fiber is outperform. When you look at the overwhelming demand signals, their totally unique speed-to-market advantage, and just the massive tailwind from the AI build-out, it all points in one direction. We think the market is going to keep rewarding the growth story here and focus on the huge strategic value of what they're building.
Okay, so for our trade idea this week, we're thinking about an AI infrastructure pair trade. Here's the setup. You go long on Wi-Fiber, the fast, nimble retrofitter, and you pair that with a short position on one of the big legacy data center REITs. You know, the ones that are stuck building those slow, expensive new sites from scratch. The whole idea, the thesis, is that speed is everything right now. And Wi-Fiber's ability to get data centers online twice as fast and 40% cheaper means they are perfectly positioned to grab a huge chunk of all this urgent AI demand. We think that sets them up to seriously outperform their slower-moving peers. And of course, please remember, this is not financial advice.